This is Rod White for Mining Network, and it's an extreme pleasure for me today to have Gary O'Connor, the CEO of Moneta Gold. And there's a backstory here in that, unusually for interviews, I was chairman of Moneta for 14 years and put the land package together, and it wasn't until Gary O'Connor joined and became the GEO and then became the CEO that project was advanced. So where are we now, Gary?
Well, thank you, Rod. Thank you for the opportunity, and thank you for putting the land package together. The Golden Highway project has no royalties. It's considerable upside, significant amount of historical work. It had all the indicators that showed there was going to be a large deposit there, and we've been focusing on that, in the last 2-3 years on building up that resource. Did the acquisition of the Garrison project.
Yeah, and you've been able to put the budget together to do the exploration, whereas I was London-based and you simply couldn't after the crash of 2009. But I think we should establish the base case. Moneta today is at $1.64, capitalised at $169 million. It's got 12.8 million ounces, of which 4.3 million is indicated and 8.3 million is inferred. And that's valued by the market at $9 US an ounce. And on the peer comparisons, it's 4 times higher valuation. So can you sort of help the listeners with the peer comparisons to establish what I'm saying?
That's right. Currently, we're trading at a discount to the average of our peers. We're trading at a discount to historical gold valuations. Look, we've put together these resources in a very short period of time. We just added 1 million ounces this year alone. Last year, with our large drill program, we added significantly more. We're now de-risking those ounces, so the more we de-risk them, more indicated we get. Many of our peers are more advanced than us. They are already in feasibility studies. They're well advanced with permitting. The more we de-risk it and move it forward, the higher the gold per ounce value will be.
Well, if we take a comparison, Moneta's at $9 an ounce. What is Mayfair at and what is Artemis at?
That's right. Well, they're at over $30 and $40 an ounce. They've both got large resources. They're both in good jurisdictions, both in good areas, but they're more advanced than us. We've just completed our PEA, our preliminary economic assessment. We completed that in September, and that showed very robust, sound economics, and we're now going to prove that up as we go through pre-feasibility studies.
Yeah, but in my opinion, on the base case, based on the PEA at the moment, the valuation is at around about a quarter of what the peers' valuation is. And you're in a position, particularly with the team that you've built, you've hired some important people over the last year who are set up to deliver this project.
Exactly. We have Jerry Rogers joined VP Projects, Jason Dankowski is VP Technical Services, Adam Kashishian, VP Corporate Development, as well as Vince Deschamps as Director of Sustainability. These are key components of delivering this project and moving it forward. We will be continuing to add value here. We'll de-risk it. These historical valuations and current valuations of our peer group. Remember, these are more advanced stage companies. This shows significant upside for potential investors and a good chance for investors to get in on a good valued company.
Yeah, but what you're doing is you are acting as CEO and you are putting the people in to deliver the project so that Moneta can take it into production. I think a lot of people assume that Moneta won't be able to do that and it will be bid for. But that's not what you're running. What you're running is you're running a company to deliver in potentially 250 to 300,000 ounces a year, and your all-in sustaining costs are about $1,000. This could be an extremely profitable company, but the catalyst that you're putting in place now, the catalyst to change the price and to change the valuation over the next year, what are these catalysts?
That's right. We've put together a team that's going to deliver. We sized the project such that we could fund and build the project, put it into production. This is something we can do on our own. We're not putting a for sale sign up. We're going to add significant value to our shareholders. And by de-risking it, advancing the project, upgrading inferred to indicated ounces, these all add significant value.
Let's just take that one. If you upgrade inferred to indicated, what would be the normal valuation? Because once indicated ounces, they can be built into a mine plan and you can go ahead. Inferred can't. So inferred doesn't have the same valuation.
No, that's right. It's fine for a global resource inferred. It can give you an idea of what the size of your project should be, how you scope it out. But when it comes time for the economics, you need ounces to be indicated. Generally, ounce value goes from $25 to $40 an ounce to $75 to $100 as you go from inferred to indicated. These are the general numbers we talk about.
Yeah, and you're a quarter of the valuation on the assumption it's inferred. So in actual fact, you've got a very substantial upside.
Exactly. We've got a significant amount of upside just with valuing our current ounces and resource, as well as valuing in what will be the new indicated resources when we complete this current drill program.
So what are the significant moments or milestones coming over the next year in order?
So in order, we have a number of drill results due to be released. We've completed 60,000 metres of a 160,000 metre program. By the end of this year, we will have completed 80,000 metres. We've only announced about 25,000 metres of that drilling.
Yeah, but you've made 5 announcements since you finished your PEA. Each of those announcements indicates that your drill program has been successful.
Exactly. It's been showing good infill, it's been showing continuity, it's even been showing some expansion. So these are big, milestones coming forward as we confirm and expand the resource.
But what it is if with a 12.8 million ounce resource, which overall is relatively low grade, with this drill program, with my observation of your announcements, and I must declare I am a shareholder and I follow this company very closely, you have in your drill program, the objectives are, 1, to increase the size of the mineral resource, which it's quite obvious you're doing successfully because you're keeping on finding extensions to the mineralisation and at depth. And the other element is very important. It's the upgrading from inferred to indicated. And really, this is only going to be happening when a new mineral resource, you can't do it in stages, you've got to do it with a new mineral resource. But when is that likely to be?
That's currently planned for the end of 2023, the final quarter. We have another 100,000 metres to drill. By the end of this year, it'll be another 80,000. And look, it's all about upgrading the mineable inferred resources into indicated. We do have the upside, actually, of a significant amount of historical drilling has not been sampled.
Yeah, so and that doesn't cost you as much.
We will be putting those results out, giving some indication. We have gaps in some of our mineable areas. We're infilling those, so we'll be converting, waste to ore there, upgrading the resources. And as you mentioned, there will be some extension of the current resources. And, we'll be putting a good steady stream of results out next year, culminating in a resource update.
But some people think, they're looking at it, a new mining project in Canada is going to be 5 to 10 years to get into production, and your permitting could be 5 years. But in the case of Moneta, in a very, very good region with very, very good infrastructure, and you've got government support, which suggests that the permitting process could be 2 years, not 5 years.
Look, we're well on our way with our environmental impact assessment. We've done the first 2 years of baseline assessment, which is the minimum required. We've found no red flags. We're moving ahead with that. We're continuing with our community engagement. We'll have a project description ready when we complete the PFS, the pre-feasibility study, early 2024. we're seeing no red flags, and we think we will see a good, smooth permitting process. So we're looking forward to doing that.
But there's also, you've got quite a lot of optionality. It's quite relevant that Moneta's hardly got any royalties, which is very unusual. You've got a number of majors that are following you closely, so one would assume that you had a number of confidentiality agreements out. But when you get over the next milestone, I think the MRE, the resource estimate's a major milestone, and then you're going to go pretty much into the feasibility study. You know, in a year and a half's time, what do you think that the valuation would be appropriate for Moneta?
Oh, we should be significantly revalued then. We'll have put out our pre-feasibility study. We will have put out a resource update. We would have de-risked the project. We would have made progress on a number of technical aspects, including the resource update, permitting. So we're looking at something that puts us more on that, $75 an ounce valuation for indicated resources in such a great location. So.
Well, you might get from $9 an ounce valuation to, say, $45 an ounce valuation. That would not be unrealistic, would it?
No, that's not. That's something that you'd expect of such a project in such a great jurisdiction.
Yes, but there's a number of majors that I understand, not from you, I understand are following the company closely, because it would take a major 10 years and $1 billion to build a 15 million ounce resource in a couple of years from production. Moneta at $9 is at a big discount to what it would cost them. So it must be very attractive if it were vulnerable. But your board has got over 50% of the stock, board and close associates, hasn't it?
That's correct. We're held solidly by a number of the big institutions in North America. Insiders hold a significant portion. We see nothing but upside here moving forward. This is a significant project.
So it's not going to be taken over cheap?
That's correct. We don't see that happening. So we see significant upside here for investors at this stage. And this is going to be a robust project from a social, environmental and economic viewpoint.
Where you are now in the market is at a base case. Although that base case is with 12.8 million ounces and with a 1.1 billion Canadian net present value. What can prevent you from delivering improvements on several of the assumptions of that PEA?
Look, we feel it was a very robust PEA. We feel there was not a lot of downside. Gold's currently trading $450 higher than our base case scenario. In Canadian dollars, that's a significant amount of upside there. Technically, we've already done a lot of the work required. Of course, we need to do more, but this is a very robust project, and I don't see a lot of downside going forward.
Well, the main downside people see is the fear that you're going to have to raise money, equity, and what you got 13 million in the bank at the moment. Your drill program is really financed through to the end of 2023, is it not?
Yes, we have 14.5 million cash at the moment. We have enough money to take us through to the end of next year with the current rate of drilling.
And at the end of next year, you're going to have a new mineral resource.
That's the current plan.
And the mineral resource is almost inevitably going to be significantly larger and probably higher grade than the present one. But the other thing is that a lot of the ounces will be elevated from inferred to indicated, which changes the valuation again.
The key focus of this resource is upgrading the category. It's de-risking it, taking it from inferred to indicated, especially for those first 11 years, the money maker years of the project.
Well, I mean, certainly I've been a shareholder for some time, and I follow it very closely, and I think Gary has done a really good job, and I think that Gary and the team are going to deliver a project which could be valued at somewhere north of 600 million from 160 odd million today. So I think that this is a very good value proposition. And would you contradict any of that, Gary?
Well, no, historically, I think that has been similar valuations that have been applied to similar projects, so that's not overly unrealistic. But, you know, we have upside, we've got a good project, and we're de-risking it, so lots of upside here.
And you'll have North American investors really scrambling to get in when your catalysts are coming through.
Exactly, there's going to be good news flow over the next year, and we'll continue to move this project forward and de-risk it.
And the board and the core shareholders are going to make absolutely sure that they've always got well over 50%, so you're never vulnerable to an opportunistic bidder.
That's correct. It's good, solid shareholders. They've backed us and they've continued to support us, so they know where we're going and the value proposition we provide.
Well, I hope that Mining Network and its audience see this video and understand what the value proposition is for Moneta. I do, and I would welcome additional shareholders.